Hi everyone, how are you? We're actually going to start standing and I'm going to ask everyone to stand. I'm going to play a little game because everyone looks like they're falling asleep. I can understand you're talking about DAOs and green credentials. So my question for everyone, because I know everyone went to an after party last night for sure. So you're going to sit down as I say the time that you went to bed last night. 9 p.m. Oh my God, Jesus. 10 p.m. 11 p.m. Midnight, 1 a.m. Don't lie now, okay? No lying. 2 a.m. I mean, we're both down by this time, by the way. 3 a.m. 4 a.m. 5 a.m. He didn't sleep. Okay, congratulations. Now that we're all a little bit awake. We'll do introductions in a second. So my name is Raagulan Pathy. I'm the VP for Asia Pacific at Circle. Most know it for USDC, but we also build a bunch of stablecoins. And I've got Alex here. I'll let you do an intro.
Yes, my name is Alex. I'm the CEO of Nansen, which is a blockchain analytics platform. And I'm sure we'll talk a bit more about that in a second.
Sure, thanks, Alex. So first question for you, Alex. Do you know where Token is? Okay, that's a no.
No, I don't.
Does anybody else? No, okay, we're getting that out of the way. See, I promised you'd be awake, right? No, getting down to real business. Alex, tell me, what inspired you to start Nansen, and tell me a little bit about your business.
Yeah, so when we started back in 2019 with Nansen, we saw that there were kind of two products at a spectrum. On the one hand, you had a lot of free products that catered to investors, traders in crypto, Etherscan, CoinMarketCap, and so on. But they weren't particularly focused on what actually happens on the blockchain at a very granular level. At the other extreme, you had anti-money laundering tools like Chainalysis, Elliptic, and so on that were focused on the blockchain itself, figuring out what was happening, but it was always with the focus of illicit use of crypto and blockchains. And we figured that there should be a product that allows investors and traders to understand what happens on the blockchain itself, and something that helps them surface the signal when it comes to trading and investing and navigating blockchains and Web3. So that's what inspired us to create Nansen. And we basically pull in transactional data from a wide range of blockchains, and we enrich the address information with labels so that we can know, what are the different use cases for USDC? Where do you actually see USDC parked? Is it exchanges? Is it DeFi protocols? Smart money funds that are perhaps hedging their positions and so on. So that's how we ended up building Nansen.
Okay. And how many wallets do you inspect today globally? And how many wallets are there globally? I don't even know.
That's a good question, actually. I think it's in the hundreds of millions of wallets. We track or tag about 130 million different addresses. And we have information such as entity information. You might say this address belongs to Binance. It allows you to understand flow of funds if there's a deposit of tokens into that. But we also have behavioral labels. So we can say this address is a smart money wallet. And you might want to follow what this wallet is doing because historically it's made good decisions when it comes to trading, flipping NFTs, yield farming with DeFi, and so on. So really, if you think about it, there are hundreds of millions of addresses, but you probably only care about a relatively small set of addresses and entities. And we try to help you surface the signal and look at those addresses that are the most interesting and impactful.
Let's talk about wallets and Web2 and Web3 for a second. So you're saying there's hundreds of millions of wallets. Many people have multiple wallets. So there might be 100, 200 million users of Web3. But just Facebook itself has nearly 3 billion users, right? 2.5 billion, depends how you count it. Do you think wallets and the proliferation of wallets, or the lack of proliferation of wallets in a way that's easy to use, that Web2 companies feels very Web2, or people can pick it up and use it and not know almost that they've got a wallet? Do you think this is a major impediment to us growing our industry, to Web3 technologies being available for the general public?
I think short answer is yes, 100%. I think most of us who are crypto enthusiasts have experience trying to onboard someone who is not crypto native to the ecosystem, only to have to spend 20 minutes to explain what a seed phrase is or a key, private key, and so on. And this is pretty frustrating. There are some interesting products, I think, like Argent, that allows you to effectively manage you don't really have to manage the seed phrase or the private keys. You can sort of distribute that with guardians and things like that. But at the end of the day, I don't think we have solutions that are ready for mainstream adoption when it comes to wallets. My thesis is that at some point, probably fintech, as we know it, which currently is mostly backed by traditional financial infrastructure, will merge with crypto to some extent. And I think a lot of the complexity will be abstracted away from users to the point where you're using something that feels like Venmo or Revolut, and it might actually be these applications. But on the back end, they're using crypto rails, right? That's what I think is going to happen eventually. You still probably want to have self-custody because there are some obvious benefits to that. But if you want to have billions of people using crypto, you probably need to have much easier to use wallets.
Yeah.
And that's not just for individuals like us here, but also for businesses, right?
Yeah.
And this is a real challenge. If you try to custody crypto assets as a business, I mean, you have to basically find solutions. And 3-4 years ago, you didn't really have good solutions for this. Now you have Fireblocks, you have Anchorage, a lot of good custody solutions.
Yeah.
But yeah, we're still at the frontier of this.
Understood. So today, USDC is used by about 1.5 million. It's in about 1.5 million wallets. But the US dollar is held in bank accounts by billions of people, arguably, today. Do you see a world in the future where people will not open a bank account and they will just have a wallet, right? And I think people are doing it today, but I'm thinking about when people start a business. And I know, speaking to you, that when you first started your business, it was hard to open a bank account. Yeah. And you wish that you could just natively have, pretty much had a wallet, but it requires the ecosystem to be complete, right?
Yeah.
So do you see that this is going to be the future? That people will just have wallets, you'll be able to move your money between wallets. People may not even have a bank account at all.
Yeah.
May not even be the preserve of one country. You might not even be attached to a country.
I mean, I think that's the future you should strive for. I think a lot of us join the crypto space because we hate banks, to be quite honest. I've had some bad experiences with banks myself. Not that I've done anything shady, but you get your assets frozen. You might have changed countries, so now your money's stuck in some bank in a different country, and there's virtually no easy way to get your funds out. And you mentioned that it took a long time for us to get a bank account here in Singapore, which is a very modern country. You would expect that, getting a bank account as a business that has, I would say, world-leading VCs backing us and so on should be pretty easy. But it took, I think, 1.5 years before we were able to open a bank account.
It took you a year and a half to get a bank account?
Yeah.
I can see why you hate banks now. So.
Yes, exactly. And then in the meantime, we were using USDC, we were using self-custody. We used certain fintech solutions as well, like Wise or TransferWise, as it used to be called. We ended up getting a bank account in the US before we got a bank account in Singapore. Yeah. So that was a little bit frustrating, and it kind of added to this feeling that we should strive to get to a bankless future, right? Yeah. There's nothing wrong with people working in banks and so on, but there's so much paperwork and bureaucracy that I think the user experience when you're confronted with a bank is not very pleasant. So I definitely think that that's something to strive for, that you want it both as individuals and as businesses. If you can get to a future where you don't have to have a bank account, you can custody your own funds on a blockchain, or you can have alternative solutions to banks. That would be a great thing. And to some extent, you can do it now, but you still need banks for certain things.
You still need them for the on-ramp and off-ramp, and you
paying
still need
taxes.
them to paying taxes.
Yes.
Okay. Paying taxes is a great topic with crypto companies. So.
Yeah.
Tell me, so USDC is used for a variety of use cases, payments, trading, for gaming, for blockchains. Do you see the growth is going to happen? Or do you think, I see the growth is going to happen, I'm biased because of Run Circle, but do you think you're going to see a future where stablecoins are going to become the real digital dollars of the future, whether it's us or others? Or do you think it's sort of had a really fast run up and then things are going to slow down and it's not going to continue?
Yeah.
Be honest. You don't have.
Yeah,
I'm not going to be offended.
I think stablecoins are the unsung hero of the crypto space in the last 4 years. If you think about product market fit, like when I started working in crypto in 2017, most of the concepts were just concepts in white paper. They weren't really, you didn't have evidence for product market fit. I think now you have product market fit for DeFi, you have for NFTs, and you also have for stablecoins. I don't think people, issue or mint more than $100 billion worth of stablecoins unless there is an actual use for it.
Yeah.
And so I definitely think that stablecoins, in that sense, they're kind of the bass player in the band. They're kind of in the background, but they're keeping a lot of this stuff up when it comes to adoption and usage. And if you invest, in a venture round as an angel investor, USDC, in my experience, is basically the default choice when you want to send funds to someone who might be on the other side of the world in a fast manner without getting bogged up with, banks losing money but transferring across borders and so on. So I think there's definitely that element, and I think stablecoins have found product market fit. If you look into the future, I just see this trend continuing. I do think that there's an interesting kind of play between the different stablecoins. You see Binance USD, you have obviously Tether, USDC, you have algorithmic stablecoins, or different models than the or the custodial stablecoins like DAI or MakerDAO. And it's going to be interesting to see how these different products can carve up the space and achieve probably product market fit within different customer segments and use cases. But yeah, I remember when USDC was launched, and the fast growth of USDC has been quite remarkable since, I think it was late 2018 that you guys started issuing these USDC coins.
Yeah, it has been fast for sure. Let's talk a little bit about entrepreneurship. I know most people in Web3, even if they're working for a company, are probably thinking about, well, maybe I want to go and start my own company, right? I hear this all the time. And I think you're the model citizen for a startup here in Singapore. I think latest valuation is 750 million or something like that, something large. What advice do you give to people who want to go and start a company? Some may be thinking about starting one whilst they're working where they are.
Yeah.
Some may just throw it in and go all in. And there's different things people are building for, but what's your advice for entrepreneurs?
Yeah, I mean, this is a big topic. I'll try to keep it relatively short and concrete. I don't think you should issue a token prematurely. That's the first thing I would say, because it leads to a lot of headaches later if you don't know what you're doing. And building a product is hard enough. If you also have to think about how a token fits into it, you have to innovate, in 2 dimensions at once, which is very difficult. The other advice I have is to consider raising more money than you think you will need, because you have cycles in crypto and you need to be able to weather the storm. It might not be as easy to raise money in a bear market than it is in a bull market. And then you need to manage your treasury just to survive, right? And so you can't degen your funds. You have to think almost the inverse about how you manage your money in crypto, maybe even being quite traditional, buying T-bills perhaps, or not putting money into some high risk yield farm. And then obviously building a product that you have to get to product market fit. So you have to think about a real problem that is large enough, that has a large total addressable market, and then you have to work very diligently with your customers and users to make sure that you have product market fit and that they keep coming back using your product, and ideally paying to use the product so that you have a sustainable future.
Sure. I think one last topic, I just want to talk about Singapore as a ecosystem for building the crypto economy, blockchain, Web3. I mean, you're Norwegian originally, you've been in Singapore for some time. You get to travel the world, as do I. But it seems to me, maybe we're biased about it, that Singapore has this incredible hub of crypto entrepreneurs and crypto companies here, right? I would say more than any other city in the world, in terms of concentration of people in crypto, Singapore seems to be winning, even though there's other bigger countries out there.
Yeah.
Why do you think Singapore? Like, why? What's the magic that Singapore's doing? Firstly, do you agree with my statement?
Yes.
Secondly, is what's the magic? Why Singapore? Why not San Francisco or London or Tel Aviv or these other places? Not that they're doing badly, but why is Singapore, such a small city, doing so well?
Yeah, I'll try to keep it short. I think we're being called off. So I'll comment a few things. I think Singapore is a place where finance meets tech. You have both those spaces. In Hong Kong, for example, you mostly have finance, you don't have tech. It's a place where East meets West as well. You have people from, say, China coming here, as well as people from Europe and the US. And then I think it is the DNA of Singapore is to be business friendly. So it attracts entrepreneurs and investors. And I think that's a great recipe to be one of the leading crypto hubs in the world.
Cool. Well, Alex from Nansen, thank you very much for spending some time with me. Thank you, everyone.